Oh man, is this bull market back? Have the concerns now alleviated, and are we now ready to head back to all-time highs? We've just got some new data out which changes the game here in terms of the recent panic and selling we've been seeing in the market. I'm going to break that down and a lot more. If you appreciate these updates, smash up the likes. Do not forget to subscribe. If you actively want to trade with me, you can do so using the links in the description to my Telegram community. Make sure you jump in there. There's a free group where you're going to get a whole bunch of alpha. Now guys, let's head straight on to Bank of Japan. We know that one of the reasons that the market has been dumping severely over the last couple of days is the fact that the Bank of Japan, for the first time in a while, decided to do a 25 basis point rate hike. They did so to tackle rising inflation, but after doing that, the market fell by 20% in their worst crash since the 1980s. And guess what? The Bank of Japan bailed out. They posted this earlier, a couple of hours ago. We heard that the Bank of Japan deputy governor played down the chance of near-term rate hikes and the yen slumped. This is really good news here, where basically they say, you know what? That 125 basis point we did has dumped the market. We're not going to do more if it creates that much instability. So this is a crazy U-turn by the Bank of Japan. To put it into context, if you look at other central banks like the UK here, Bank of England, like the Fed in the US, they've climbed up to 5%, right? Because they know they need to tackle inflation. So Bank of Japan have just done 125 basis point hike and they've gone, uh-oh, this is a mess. We cannot afford to do this. Japanese Nikkei stocks were tumbling to the ground and it was a big problem. So now they're bailing out. What does that mean for the wider market? It's good. It means that risk rotates back on. It means that the carry trade isn't going to see all this selling pressure as we were seeing over the last kind of 36 to 48 hours. That's good news. So we are seeing the stock market bounce. We are seeing crypto bounce. And that brings me back onto the news here, which is on the Bitcoin chart. We are maintaining our bull flag. Now, in the peak of this candlestick when it was happening, just a couple of days ago here on Monday, when the market was dumping, I tweeted out that, guys, if we can hold this bull flag pattern despite what's going on, keep in mind, not just the Japanese issue, there was fears around a recession as well on the same day. If we can still maintain this bull flag pattern on Bitcoin, that is hugely beneficial. And if you go back a couple of days beforehand, when price action was losing its EMA ribbon on this candlestick here, I created two dots. And if you don't believe me, go watch my videos, right? Just go back a couple of days and just watch those videos. You will see I created this dot here and I created this dot here. And I said, I am nibbling at those 2 points. And I did exactly that. I nibbled as we started falling, and then when we crashed, I nibbled some more. And now, not only has this wick now been bought up, right? We were as low here on that wick as we felt in 49.5. Not only has that been bought up, but now we're back on Bitcoin touching as high today as 57.7. Look at that, 49.5 to 57.7. And that's just testament to the fact that you need to buy the dips. When people are fearful, when everybody's really scared, can you train yourself to do the opposite? To jump in, to believe your conviction? Because guess what? The whales are doing that. Every single time you see these crashes, a couple of weeks later or a couple of days later, what do you see? MicroStrategy bought this much Bitcoin. El Salvador bought this much Bitcoin. Bitcoin whales bought this much Bitcoin during the dip below 50,000. Right? If you want to become a whale, you need to think like a whale, right? You've got to avoid your emotions, not be the little retail hands that panicked here. You don't want to be that. You want to be able to buy from positions of strength. I keep saying it. I know it's boring. Buy from positions of strength. Where's the strength here? Support. Buy from positions of strength and avoid buying at the extended points, right? You're silly if you buy up here. You're smart if you buy here. Silly if you buy here. Smart if you buy here. And so if we bring that back down to the weekly EMA ribbon, what did you see? We had a momentary collapse into the EMA ribbon. Had you have bought any of this in the EMA ribbon, you're buying from position of strength. The silly people who are buying here up at all-time highs at 75, it's silly. Wait for pullbacks. Nibble. Now great. Let Bitcoin go form a higher high. Go touch 80,000. Go touch 90,000. Go touch 100,000. I'm not going to buy that extended point. Wait for it to come back to EMA ribbon again. Buy from positions of strength. So that's ultimately the skill you need to be able to understand, is that when markets are fearful, when you've got fear and greed index sitting in fear territory where you can see that markets are visibly worried, you look at it and you go, hang on. What's changed fundamentally for Bitcoin? What's fundamentally changed for Phantom or whichever altcoin you guys care about, like I shared in my video yesterday? And if you have conviction, buy the dip, right? Because you can't say you have conviction and yet the price fall 40% and you're not able to buy. Because everybody does this. Everybody, when Bitcoin's at 74,000, they go, I wish I bought more Bitcoin when it was down at 49,000. It went to 49,000 the other day. Did you buy? No, you didn't. No, you didn't, because you got scared. When things are going down, your brain will always say, oh, it's going to go down more, it's going to go down more, I'm going to wait to 30, I'm going to wait to 25. And when it's going up, your brain always tells you it's going to go up more, it's going to go up more. Because you need the candles to give you confirmation. Whereas an experienced investor doesn't need that. The experienced investor goes, do I like the product? Is it good value to me? Do I like Bitcoin at 49,000? And the answer to that question for me, I can't put the answer for you guys, is yes. Right? Because I know for each Bitcoin I can buy at 49,000, when we get to 100K, I've doubled up my money. And it's as simple as that. And if there's ups and downs in the interim, no problem, I'll buy more. Right? But ultimately, if that's my thesis, I'm either going to be right on my thesis and Bitcoin will go to 100K eventually, or I'll be wrong. Simple as that. That's the investment decision you make. And if I'm wrong, then I have to take the L on that. Okay, what do we reach? Do we reach 80? I'm still up. Do we reach 60? Do we collapse to 0? If we collapse to 0, okay, fine. That position is gone. I don't think that's going to be the case. Right? When I do my calculus of is Bitcoin going to go to 0, it's a very, very edge situation. And that's ultimately what investing is. Stacking the cards in your favor. Being happy with the risk to the upside versus the risk to the downside. So, good news here. Bank of Japan bailing very quickly. This is good. Because there was a worry that this unwind trade, this carry trade could have been unwound for a long period of time, which would have seen a lot of selling and a lot of dumping. It's good that we've eliminated that threat. The other thing I want to leave you guys with today is a little bit of good news from shipping giant Maersk. I don't know if you pronounced that correctly, but one of the biggest shipping companies in the world said, look, there's no sign of US recession in freight. We're seeing good freight demand. And that's a positive sign because, remember, the market's a little bit tetchy right now. The market's like, you know what, Jerome Powell, you didn't do 25 basis points. We're going into the next meeting in 6 weeks, and now the market's saying, forget one rate hike, you need to do 2, which is crazy because the market here, 62% of the market, are saying we want a double rate cut at the next meeting, which is 50 basis points. I personally don't think that's going to happen. But the problem is, if the market expects now 50 basis points to happen, and Jerome Powell only does 25 basis points, which I think he's going to do, then the market's going to be upset. So don't be surprised to see this playing out over the next kind of 6 weeks, seeing this percentage change quite a bit as the market tries to decide, do we need 25 basis points or do we need 50? Is Jerome Powell doing too little too late? Are we heading into a recession? And the way they're going to decide that is by looking at the data. They're going to look at company earnings. They're going to look at the new inflation figures that come out, any job figures that come out, any manufacturing figures that come out to try to ascertain whether we're heading into a recession or whether growth is okay. And don't be surprised, therefore, interim, in those days, that markets become very volatile. Oh, look, this number came out. It suggests we're in a recession. Panic sell. Oh, look, this number come out. It shows that it's not too bad. Rally again, right? Don't fall for all of that and get yourself liquidated in those movements. And that's why I'm keeping it spot right now, keeping it very simple, trying to take long trades from positions of support. And again, if you want to see which altcoins I'm trading and when, you can do so in the Telegram community. Hopefully you found this update useful. If you did, smash up the likes. Leave me a comment below. Let me know that you've made it to the end and you're understanding the stuff I'm sharing with you and you're finding it useful. Thanks for watching, and I'll see you in the next one.